Hello class, my name is Janine Miranda and today I am going to talk about how to read your paycheck. Now in my past life I worked for a major payroll corporation where I learned a lot about payroll and I wanted to share a little bit of that with you. Okay, so students, get your paychecks out and let's get started, okay? Now here is my visual. Here is the check stub, and here is the paycheck. So let's start out by your gross pay. So your gross pay is calculated by the hourly rate times the hours you worked. For example, if you worked 40 hours at $10 an hour, that gives you $400. That's called your gross pay. It's not your take-home pay. Your take-home pay is called net pay, okay? So let's start by doing the mandatory taxes first. These are not negotiable, okay? Let's start with federal. Federal is calculated by the number of allowance you have put on your W-4 form. That's the form that you filled out when you first start your job. They give you a form called W-4. And that is telling them, hey, I am John Doe, single and zero, or married with 4 allowances. And that's how federal calculates your deduction. Okay? Now, the next mandatory deduction is Medicare. Now, Medicare is calculated by 1.45% of your $400 gross pay, which that will give you $5.80. Also, Social Security is taxed at 6.2%, which that gives us $24.80. Now, some companies may word Social Security and Medicare differently. They will put FICA, and they would put 2 different amounts. So FICA also is Medicare and Social Security. FICA means Federal Insurance Contribution Act. And those 2 are really important. Why? Because when you retire, Medicare will be your insurance. That's the government insurance that is given to you because you have put money into that. And that helps you pay your medical bill, hospital bills, co-payment, and so forth. Okay? And your Social Security is what you get when you retire. You get a monthly direct deposit for the years that you worked. So that's how it's calculated. Social Security is calculated by all the years that you worked, and that's how they calculate what your monthly income will be. Okay? Now, the last tax is called the state tax. And the state tax is calculated by your income rate. And everyone's different, okay? And the income rate is an amount that you contribute to your community, okay? For example, you contribute to your schools, your library, your fire department, and police department, and many other organizations, okay? So those are the 4 mandatory taxes. These are not negotiable, okay? The other deductions are health insurance, dental insurance, vision insurance, 401k retirement plan, loan, or union dues, okay? And the way the insurance is calculated is how you chose that plan for your family, what plan you chose to have deducted from your check, okay? And that's how they take away an amount of your check for your health insurance that you chose for your family, your dental, your vision, And also 401k is also important. That's another retirement plan. And the way that's calculated is calculated by a percentage. Okay, you may choose any percent you want, 1 through 6. So based on the gross that you're based on the gross, you can say, okay, I can afford 3%, and 3% of that gross will be deducted and it will go into that retirement fund. So that's a good thing to start now that you're starting to work at an early age. That's very, very important that you do that. Because when you retire, you would have 2 checks coming to you monthly. For example, Social Security and your 401k. Okay? And the 401k is sometimes your company will match whatever you tell them to deduct. Let's say I want to contribute 3% from my paycheck, and your company will match that. Okay? But that will be another tutorial because that goes into a little more in depth on that, okay? So once they've deducted all those deductions, especially the mandatory and your other deductions together, they will take away that from your gross pay. And that's how you get your net pay. That's how you get your final amount that you take home. That is your paycheck. Okay? So there's 3 forms of payments that you will be chosen to have. You can choose to have a paper check, direct deposit, which is an electronic fund. And so your company will give you a form to fill out that will have the name of your bank, that will ask for your routing number, your checking account number, whether it goes to your checking or savings. And you can have a percentage go to your checking or savings, whatever you choose. And they'll do a test run before that money goes direct deposit, just to make sure it goes to your account and not someone else's account. So direct deposit is a good thing to have. The next and final payment is a plastic card, which also works as a debit card. So that debit card is for employees that may not have a checking account or a savings account. And so that is provided to them. Okay. Now, the last thing I want you to do when you get your pay stub, save them and make sure you look over them, because sometimes there's clerical errors. And if there is, you want to let human resource know right away. Why? Because at the end of the year, you will be given a W-2 form. And that W-2 form is going to match the last check stub that you were paid in the last month of December. And you want to make sure that all that matches together. Especially make sure your name is written correctly, your Social Security, and your address. That's very, very important, so that everything goes smoothly when you do your taxes next year. Okay? I hope you learned something today. Do you have any questions for me? And thank you.